Hello there. This is a video about Asos, a company that we invested in about 2 years ago. And this is kind of like uh, a check-in on how the company is doing and what we think about the company now. So with that said, let's just jump into the presentation. For those who are not familiar, ASOS is a fast fashion retailer that operates primarily online. It's a very well-known and popular brand, especially in the UK. And as I mentioned, we first invested in the company in July 2021. And then we made a video about our investment in September of 2021. And there's a video link to that, or there's a link to that video in the description. Shortly after we invested, the company started to experience some problems. And since our investment, the shares have fallen 90%. And we averaged down a few times along the way because we still believed in our thesis. And we still own shares in ASOS today, but our opinion of the company has changed, which is why we are making this video. And this, you can see here, is the chart of when we invested, which is in July 2021 until now. And it's fallen about 90%, which is obviously a very painful chart to look at for us.
Right. So why we invested. So there's an English investor called Nick Sleep who's been gaining some popularity in the value investing community over the last few years due to his impressive track record. And we'd heard that he had invested in ASOS and it had ultimately piqued our interest through that. And it also piqued the interest of other people in the investing community. And consequently, several YouTube videos were published talking about how talented Sleep was and how good of a company ASOS was. We did a lot of our own research, and ASOS did look like a good company. We knew it had a strong brand. And on top of that, revenues and net income had grown a lot. And if it kept growing at the same rate, then the current valuation looked attractive. I mean, ultimately, we did truly believe that ASOS was a good company. We didn't just copy somebody else's idea. We did do our own research and we came to our own conclusion.
So here we just want to show you some charts. So this is the same price chart as you saw before, but it's a longer term view. So this is what we saw, or the first dot there when we invested in the company. So we invested around 3,800, and the price didn't look that high compared to what it had been before, because it peaked at way higher, and then the last two times it had dropped in about 2014 and then around 2020. It fallen to around 2,000. So we thought that if we buy at 3,800, then the downside is limited if it were to go down to that level again. Now, obviously, we did not think that it will go that far down, and now it's trading at below 300. So we obviously underestimated how far the share price could fall. And this is what we looked at in terms of revenues when we looked at the company. So we could see that revenues had increased a lot over the years. So we thought this is an amazing chart. So if revenues keep increasing, then the valuation is going to be very good, at the time that we bought it. But what turned out happening is that revenues stalled out and then actually started declining a little bit. And then moving on to net income, what we saw at the time, we saw that net income was a bit choppy, but over the long term, the company or the net income of the company did increase a lot, and they made a positive net income in every year. But then what ended up happening was that the company started losing money. Again, something that we hadn't predicted, because we thought that even though the company was going through some troubles, then they'd always made money. But obviously, when this started happening, the share price really started tanking.
So what was our mistake? Well, in hindsight, our judgment was clouded by the fact that a celebrity investor had invested in the company. And we'd bought into the hype a bit too much, and our opinion was therefore biased. We also overestimated the quality of the company and underestimated how far the share price could fall. The company started experiencing problems due to higher freight costs, which were a result of supply chain problems stemming from COVID. And then there was the war in Ukraine, which made ASOS exit their business in Russia. Moreover, they had a culture of growing at any cost, and this led to them buying more stock than they could sell And then when they eventually had to reduce the price of those items to clear the stock, it resulted in losses. And then in 2022, the company made its first loss since 2003, as you saw in the charts earlier. The momentum of the stock completely shifted, and then it seemed like everyone just gave up on the company.
Now, our reaction to this was that as the price was falling, we were not too worried because it's common for share prices to fluctuate a lot. And we doubled down a few times, and the last price at which we bought was somewhere in the 700s. But as the share price kept falling, we eventually realized that we had misjudged the company. We took some time to analyze the situation, and we realized that we needed to develop a new process, and that is why we developed our new investing system. And we'll leave a link to a previous video of ours covering this new system if you want to check out, or if you want more detail on that. Now, Asos's price drop forced us to go back to basics and find a way to work that was more efficient and that reduced our biases. And we also realized that listening to investing gurus, if you can call them that, and then also YouTube investing videos was not good because it biased our opinion. And with regards to our shares, we have not sold any of them actually. And we will keep holding them because although we overestimated the quality of Asos, we still think it's a reasonably good company. And at the current price, when it seems like all the negativity has already been factored in, we feel it would be a mistake to sell. I mean, if we wanted to sell, I think the time to sell would have been, 2 years ago or before the company had dropped a lot. And there are indicators that the tide is turning for Asos. They have been implementing strategic initiatives that have reduced cost and return the company to profitability. And we therefore believe it would be a mistake to sell now because we believe we have taken most of the pain already and that the upside is actually higher than the downside at the moment. And that summarizes our current view of Asos. And we thank you for watching this video. Bye.
Bye.